Peace and love, and welcome back to the channel. If you haven't done so already, would you please hit the like button and hit the subscribe button, and then hit the little bell so that you can get new notifications when I come out with new content. All right, so let's get into it. Uh, one of the things that has been a tremendous help to me in my trading journey is when I started to track my trades. Tracking your trades and following through with your trades can help you see where you may have made an error here or there. It can help you fine tune and buff out those rough areas of your trading and whatnot. So let's get right into it. I'm going to show you what I do and how I track my trades. Um, all right, let's get to it. So I use Yahoo Finance, and you know, um, very simple. I just go in. I like using their platform to track my trades, and it's really only because I'm familiar with it. So I come over here. I put in the ticker, and I come over here and go to the options chain, and we're gonna duplicate a trade that was already made. Um, let's go to July 15th. And um, actually looking at this to trade uh, on Tuesday, be looking for an entry on this. So uh, let's get ahead of it. All right, let's look at the $90 strike price. And what I like about Yahoo Finance is it gives you all the information and it gives you this link. You can come here. Now, what I'm going to do is I'm going to save the link because I'm going to use it in a minute. And click on the link. Now, so you have all the data as to where that contract stands at the close on Friday. It gives you all the information. It tells you the previous close, where it closed at on that Thursday. It gives you the opening price. It gives you the bid price. It gives you the ask. It reminds you that this is the $90 strike price. And these are calls. It gives you the expiration date, and then it gives you the range. Now, the range is the lowest price of the day and the high price of the day. Okay. And it gives you the volume, how much volume, and how much open interest that this contract has in particular. Now, the way I track my trades is twofold, but generally, just for a macro view of the contract and tracking it from the day that I enter the trade, I look at at all of this data, and I come and I get the open price, right? And then I get the high price. I look at the range, and I get the high price. And what I'm looking for is a percentage from the high price, from the open price to the high price. What percentage did that contract make just from there to there? Now, we see that it dipped a little bit lower um, at 405, and I'm just familiar with this contract. That's why, because that just because it could have hit the high before it hit the low, but I'm familiar with it, so I do know that the low took place first. So it ranged $1.45, 145. So that was the range of the day. The open was 450. Now, I do that just so I could keep track of it, of what it did. It's kind of a liberal way of looking at it, um, to get a good estimation of how the trade did on that particular day and I'm going to track it until it expires, all the way up until the 15th. I keep track of that. And then I do another one where I track my entry. Where did I enter? And see, that could help you out a lot, because let's say if I entered that particular day and I paid $500 for the contract, right? Well, the open price, that let me know that I didn't get too good of an entry if it only ranged as high as 550 and it went as low as 405 and it opened at 450. That tells me that I didn't do a good job of entering this trade, right? Because and that's where you get your money for the most part, is in your entry. You know, you want to get optimal entry best you can. So I do it this way. I guess I should have said conservatively. As a conservative look is to look at the open price and use the high, but I also use my entry, because if this is the range, I want to get as close to this bottom as I can and get out as close as this top. If I'm using this as a day trade, which this particular trade, I traded it on June 24th, actually, that Friday. And it went crazy. I got the high from the open to the high was like 113%. I'm going to show you all that. Now I'm going to show you all how I track my trades. So here I got a spreadsheet that I use. And remember, just for the sake of this video, I'm going to go over what I do exactly with the sheet. I just paste in the contract right there. Then I put in the day that I entered. Now that will be tomorrow. Put in the ticker, Airbnb. Airbnb, the expiration date of the contract. And as you can see, right above it is a contract that I was just talking about from the 15th. I mean, the 24th. Then is it a call or is it a put? This is a call. Then I will put the strike price. This is a $90 strike price. Then I will put in the open price. What did this contract open at? Now, since I'm not entering this contract, we're just going to use the data from yesterday. And the open price was $450. The high price was $550. Right? And my spreadsheet calculates it for me, and that lets me know that that contract from the open price to the high price was $550. I mean, it was 22%. Okay. Now, what if I used instead of using the open price, if I used the entire range, it ranged from 405, a low, to 405. That trade on Friday got 36 potential. Potentially the highest you could have gotten off that contract was 36%. Okay. But I don't use that. I use another sheet. As you can see down here, I got I've been tracking trades for the last over a year now. Probably, I would say 15 to 18 months. About 15 months I've been tracking trades. Trades that I call from my trading group and my personal trades. So, and then I will go. So, let's look at some other examples. This right here, I will put the high price throughout the duration of the contract. Okay. Let me look of a good one. Okay, let's look at this. I believe this is the Myrna play from a couple weeks ago. Yeah, Myrna. So on the 15th, entered Moderna, calls, 130 strike price. The open price, the price at the open of the contract that day was 413. It had a high of 730 for a 77% return from the open to the high, right? And then throughout the duration of the contract, the contract, the high of that contract from the date that it was bought was 1425, right? And I got that high on the 24th of June after entering on the 15th of June, right? It took 7 days to get a 245. That's the max potential you could have gotten off this contract. Could have gotten up to 245%. Okay. And the contract expired. This was the expiration price, 1425. And 24, and the high was 1425. So Airbnb looked like it. Moderna had a lot of room to run with it. But also, I'm going to share the good. I'm going to share the bad too. Now, this Boeing trade on the 21st, this was called Boeing. Expiration date was on the 1st. Calls, $145 strike price. The opening price was $350. The high of the day was $350. So basically, Boeing came in and it fell off a cliff. It went right against us from the time that the market opened, right? So, of course, we got a big fat zero. And then, so the high of that contract throughout the duration of that contract was $350. On that particular day that we entered the trade, the contract expired worthless for a big fat zero. Now, as you can see, most of these numbers, most of the data, some of them I haven't put the data in because they're long swings possibly. But by doing that, I keep track of everything that I'm doing, the max potential. Here's a trade that could have gotten in 5 days. This trade got 990%. Here's another trade that only got 6%. So there's ebbs and flows and everything like that. But so what does that do? Why do I do it? Here's why you should track your trades. Number one, humans have the capabilities of repeating themselves, right? Especially in the markets. Institutions do pretty much the same thing all the time. So I'm able to, if I have years and years of data tracked, I like to go and look at what happened on this day, right? I do that usually on the weekend. I'll check out what happened this week, the upcoming week. What did it do last year or even the year before that? But I've only been tracking for a year. So I have enough data to go back to look at what happened last year, right? And it helps me to see if they're up to the same old tricks. If they were bullish on this week, last week. Like for instance, that one play I just showed that. Well, I'll just look at this one. This one got 309%, right? Well, this took place in May of this year. Next year, this is going to look good. When I go back and look at what happened in the first week of May last year. Next year, when I go and look at that, then I go and I say, hey, Uber got me 64% on the first day off that put. And then if I hold it for a couple days and let it cook a little bit, I can potentially get you know, up to 300% or something like that. You know, um, tracking your trades, you could, and also it helps you to get your entries together, right? Like that Boeing play that I just shared, um, that did nothing, right? Well, what the hell did I see the day before that made me think that Boeing, because I believe that they were trading at around 138 ish, something like that. What made me think that it was going to 145, right? So that helps me to fine tune my analysis. Um, Go back and revisit it and try to figure out where did I go wrong? What made me think this thing was actually going to be bullish, um, and whatnot. It helps me. It helps me with my entry. Um, you're looking at a contract. That's why I do two of these sheets. I do what I actually did, and I also do um, from open to high. Why? Because I want to see where was the good entry. I can tell you right now, this Airbnb play, this was a day trade. I expected it to be a day trade when I took it, right? And it ran right to my strike price, got in at 270. It ran to 575, 113% return, right? Now, the contract did that on day one. That contract expired worthless. Or wait a minute. No, I take that back. The contract is still valid, but it's down big. It's not performing as well because we just looked at Airbnb. Airbnb is trading at $91 at the close on Friday. It had gotten up to 105 on December 20. I mean January. January. Damn, what's wrong with me? June 24th. So these are ways where you should pay attention to every trade you're making. Track it. This helps you fine tune your game. This helps you to look back and say, okay, I could have gotten a better entry here, or maybe I should have gotten out here, or maybe I didn't. Maybe I didn't get out at a good time, um, or maybe I could have swung it a little bit more if I would have held it. Like for instance, that Moderna play again. Uh, it took 7 days of holding that to get a 245% return. Now, here's another one with a nice 200% return. Here's another one with another 200% return. But that's not to get greedy and thinking that you're going to get hundreds of percents every time you trade. You have to be happy with getting these 31%, right? Because here's the deal. This 31% trade on AMD, the market went against us soon thereafter, uh, the day that I entered the trade. Was it once I seen that it broke the pattern and went against me, I was out of there. Now I had a better entry than 286, but I did get out kind of high on the upside. But once it started to retrace, why? Because I knew what my support and resistance levels was. So all of those things are factors in the trading. Hopefully this helps somebody. Leave me a comment or hit the like button, hit the share button. Let me know if this helped you all out any. I'll be coming out with more content pretty soon. Click the link and follow me on all my social media platforms. And my Facebook link is there. My TikTok link is there. My Instagram link is there. And there's also resources in there like my investing course. And then I do free consultations as well. So thank you all for those who have been supportive and whatnot. I appreciate you all. I don't take it lightly. And I'll be back with more content real soon. Peace and love.